Welcome back. You're with us in the CNBC-TV18 Motilal Oswal studios, and we're just counting down to market opening. Actually, we'll start getting the pre-open rates any second now. The SGX has been indicating that we'll start positive by about 0.5% or so, and very soon we'll see if we're getting that confirmation even from the pre-open session. While we wait for that, let's quickly get a couple of technical ideas going and move on to our technical expert. See if we have Sudarshan with us. Yes, Sudarshan is with us, as is Mitesh. Good morning, gentlemen. Thank you very much for joining in. Very interestingly poised, Sudarshan, I'll start with you first on in the Nifty itself. We've been talking about this whole divergence between how the bond yields are moving, what the bond market is doing, and what the equity market is doing around the world, and perhaps even in India. Your thoughts on the index first?
You asking me?
Yes, Sudarshan, your call on the Nifty.
Okay. See, the markets, I don't track the bond yields, so I can't comment on that. The Nifty charts are enough to make a judgment. 2 days ago, the Nifty was in a trading range and on a verge of breaking out from 17,900. That was a trade we had recommended. Go long if that breakout happens. That occurred. Now, the initial at a target for that breakout is 18,100, which I think will be touched today. So the trade is, if you are already long, I suggest you take profits around 18,100 or wherever you are comfortable and be patient, look for an intraday dip and then re-enter at a lower level. In case you are not long in the Nifty, then wait patiently for an intraday dip of about 50 points from the open and go on the long side of the market. The Bank Nifty is very interesting because it has not broken out of a trading range, unlike the Nifty, which did so. But if it crosses 41,800, which it should today, buy the Bank Nifty, keep a 200-point stop loss and go with it. So for both the indices, the trade continues to be buy on dips.
Okay, buy on dips. That seems to be a strategy for the day. But let's hop across to Mitesh as well. Mitesh, morning. What's your trade on the index?
Morning, Ajay. My understanding is that the Nifty has kind of given a breakout. Yesterday, we talked about the fact that we are contracting and the Nifty is broadly doing a range of about 17,700 to about 17,950. Now we can say that it's moved above that. And therefore, the next targets on the index would be about 18,150 to about 80 and then 18,250. So I'm looking at these two targets in the short term. The Bank Nifty hasn't crossed the budget day high, which the Nifty has done, but I think it should at least approach that. So I'm looking at a test of or retest of 42,000 possibly in a day or two.
Okay, so retest of 42,000 on the Bank Nifty. Both experts going with calls on more the bullish side than the bearish side. Let's talk about stocks then, Sudarshan. Which ones would you be working with today? What are the ideas?
Well, we start with Infosys. I think Infosys is still a buying opportunity with a stop under 1570. And my only intraday short is Navin Fluorine. Navin has gone through a small dip from a trading range. That tells us lower levels are probably coming. Sell with a stop of 4140. It's an intraday short. M&M is a buy. After a big rally, it's been in a trading range for 8 to 10 days. That range should break on the upside given the nature of the Nifty's breakout also. Buy with a stop under 1350. And finally, SBI Cards has been rallying now after a big dip. This is a buy on dips trade. Buy with a stop under 740.
Mitesh, what about you? Your stock picks?
Yeah. I have all buy calls today, Prashant. Good morning. The first one is a buy on Oberoi Realty. Keep a stop below 849. Look for a target of around 895 to begin with. It's been consolidating since the numbers, but I think the overall chart setup is positive. A buy on MGL, which is a conditional buy. I think it should get past 910 to give a breakout, and it's closed at about 904. So buy about 910 with a stop at 894 for a target of 950. A buy on Bosch, which had a good price day yesterday. That's a buy with a stop below 17,550 for a target closer to about 18,500. And HDFC Life seems to be reversing after a correction, so that can be bought for a bounce back. Very short target of 530 or a small target of 530 on the upside, and a stop at 514.
All right, gentlemen, thanks very much. Good to speak with both of you. Actually, Mitesh, please do stay on. I just want to, I'm putting out a chart and I'd just like your quick response to that. This is the market laser, and we're talking about Reliance, RIL. Actually, Reliance, we discussed this yesterday in the morning around the same time as well, but without a picture. And you know what they say, a picture worth 1,000 words. So that's the picture basically, right? And the question is Reliance basically breaking out? As you can see, it's a simple chart. It's a daily chart all the way from, late last year. There's a falling trend line all the way from the 1st of December 2022. Several touch points in January of 2023. A breakout which turned out to be a false breakout on the 10th of Jan 2023. I mean, 2-day breakout and then promptly fell below under this trend line. Many touch points once again in 20th, 21st of January, and now finally, it's basically broken out. It broke out on the 14th. It had a move up yesterday. From in 2 days from 2,300. It's basically added about 150 odd rupees or so. I mean, that is interesting and important, not just for, of course, what the stock itself will do, but what it can do for the market as well. Just wanted to throw this to you, Mitesh, in terms of any views on RIL. Go on.
Prashant, it was a call yesterday, and I've been suggesting to accumulate RIL for the last many days. The idea is that one, as you rightly put on the trend line over here, the stock has had a correction, and the bottoming out this time was around 2,310 odd levels, and last time we had got a low of around 2,320, 25, which was in September. So I think it was testing the earlier bottom, giving signs of consolidation, and the indicator setup had clearly turned positive from oversold levels. So good setup overall. The trend line breakout kind of confirms the observations of indicator setup, and therefore I think they should have started, at least if nothing else, a strong short-term up move, which could give you targets in the range of about 2,480 to about 2,500 to begin with. But I suspect it will be much better than that. And I think eventually I'm looking at a target of 2,600 plus. And 2,600 plus was the high which the stock made in January. So I think that high should be revisited.
Okay, got that, Mitesh. Thanks very much. Stay on. We'll, of course, come back to you as markets open up. For now, let's get a conversation going around what's happening with the capital goods space and what does the third quarter earnings season tell us. Renu Ved of IIFL Institutional Equities is now joining in for exactly that. Renu, good morning and thanks so much for joining in. It's been quite remarkable the last couple of days and how we've seen these companies report numbers. From the top of my head, I mean, I can remember, of course, Siemens very clearly. Huge margin expansion that came through for ABB as well. And then these companies have also reported strong order books. Your first thoughts on what the key takeaway is, what the key message is from the third quarter as we're looking at some of these large capital goods giants?
Yeah. Good morning. I think the clear takeaway is that the green shoots that they had seen on the capex side is very well sustaining. This is both driven by government sector as well as private sector investments and capex. And this momentum has been held pretty steady across projects as well as the short cycle business. More interestingly, in this quarter, the striking feature was a sharp margin expansion that we saw. And which was clearly, I think, if you look at three elements here, a very strong operating leverage driven expansion. Plus, most of the companies had taken price hikes for the short cycle products. Now, while these price hikes were taken last quarter, we had seen some softness in commodities. So most companies, at least the short cycle product driven companies, have managed to make that extra 200 bips kind of margin expansion purely based on commodity arbitrage, which eventually will thin out because costs have started to go up and they may not be required to take further price hikes in the fourth quarter for the increase in commodities. So the short-term mismatch has further added to the operating margins that we saw in the last quarter. And nonetheless, third and more importantly, the mix has started to become favorable. Higher technology products are being accepted by the customers, and customers have probably accepted the inflationary environment. So the willingness to pay an extra dollar for better products is definitely there in the market. So all these three elements together is resulting in the strong margins that we saw in this quarter. But we definitely expect some tapering of margins as we move towards March and the June quarter. Underlying momentum should continue to remain strong.
All right. Renu, I have two questions. So you said customers should pay top dollar, but should investors pay that top dollar as well? So in the case of Siemens, right, the 1 year forward P multiple, this may be a little dated, but maybe not too much. It trades at 60 times earnings, 1 year forward. I looked at where it was pre-COVID. It used to be at about 37 times earnings. 10 years back, it used to be traded 28 times. It trades 60 times, Renu. So what does one do here?
So I think this is very typical of especially the MNC companies during the cyclical upturn. And it's just not Siemens. You look at ABB as well. Even that is trading at the higher end of their valuation multiple. So there are two reasons to look at it. One, during an upcycle, typically because it's difficult for investors or any analyst to really forecast the power of earnings that operating leverage can bring. And I think that surprise, both in terms of volumes and margins, has been seen now for the last 3 to 4 quarters, and which has helped earnings upgrade cycle. So when we see the valuation of the stock prices going up, it first tries to discount the earnings upside or the earnings re-rating that can happen. And partially that, and secondly, because there are cyclical drivers which will support much longer term growth. So during the upcycle, the valuation multiples of these stocks tend to move towards the higher range of the long-term P multiples. So just to give a number, if you look at the valuation multiple during 2012-14, which was probably base at the bottom of the cycle then, even then ABB would have traded at 35, 40 times. Siemens was at 35, 37 times. 1 year forward multiples. So valuations then were not cheap when business outlook was very gloomy.
Sure.
Contrast to that, today the environment is better, so there is a much better premium. And valuation is also a result of growth which is expected.
Got it, Renu. So basically, I think what you're telling us is be prepared to pay more for these stocks in case you want to keep them in your portfolio. Which brings me to the final question then. I think you've upgraded Cummins, if I'm not mistaken. Prashant was just mentioning that a while back. And what would be your top pick in the sector and why? Just very quickly.
Yeah, so Cummins has been a top pick for last 2 years. Earnings have been upgraded, but the recommendation was always a buy. So within the industrial short cycle, our top pick is Cummins. We also like ABB Siemens, but as you said, valuations are sticky. So for fresh buys from these levels, we will just hold on. We prefer to add if the stock consolidates. But apart from Cummins, the top pick would also be Larsen in the large cap space. Mid caps, probably names like KEC will start to look better, or MTAR Technologies. But pure industrials, Cummins is our top pick, followed by ABB and then Siemens.
Okay, all right, Renu, always good hearing your thoughts. Thanks so much for stopping by and filling us in with the view on a whole host of stocks that we just discussed, and the disclosure as well came up for you on the screen. But it's 9:10, so let's get Sudarshan back. Sudarshan, what's your 9:10 call?
Well, SBI Card. SBI Card is a buy with a stop under 740.
Okay, Mitesh, what about you?
Yeah, I'll go with a buy on Oberoi Realty. Keep a stop at 849 and 895 should be the target.
All right. Thanks very much, Sudarshan and Mitesh. Well, windfall tax cuts, right? Let's just refocus and shine the spotlight once again on that. Sonal is here with details. Sonal.
Thanks a lot for that. Well, the biggest takeaway is that there's been a sharp decline or cut in export duty on diesel. But let me run you through the numbers first. Windfall tax on crude production has been cut to 4,350 rupees per ton versus 5,050 rupees per ton. It is a cut, but remember there had been a bigger increase in the last revision as well. Now, an export duty on ATF, that has been cut to 1.5 rupees versus 6 rupees per litre earlier. On diesel, it has been cut to 2.5 rupees per litre versus 7.5 rupees per litre. So that has been the big takeaway this time, because companies were exporting higher amounts of diesel, and there the spreads were impacted because of this windfall tax. Export duty on petrol continues to be nil. So this is positive news for refiners, especially Reliance Industries, which has a larger chunk of exports coming in from diesel itself.
Okay, got that, Sonal. Thanks very much. We'll keep those stocks in mind as the market opens up. We also need to keep Interglobe Aviation on the radar. Vivek, just quickly jog our memory. What should we watch out for with respect to this expected block trade?
Absolutely. So 4% of equity is expected to change hands, as per our sources. We understand Shobha Gangwal is likely to sell the stake in the company. At the end of December quarter, Shobha Gangwal, Rakesh Gangwal and the Chinkarpur Family Trust held almost 33.78% stake in the company. So now the stake will fall to a little less than 30%. And the deal is expected to happen at a discount to yesterday's closing price. 1,875 is where, the floor price of the deal stands at.
Okay. All right. Thanks for that. That's Interglobe Aviation in focus. We'll take a very quick break here on the... Okay, apologies. Mitesh is, of course, with us. Mitesh, anything else coming up? We are 2 minutes from market opening. Anything else on your screen which you'd like to highlight?
So Prashant, I think, disclaimer, I have this stock in my portfolio. I think PFC after a correction is looking up again. I think the numbers were excellent. And yesterday was some kind of a breakout candle. I think it should retest the highs of 160, which it made in the month of January.
Okay. By the way, in the pre-open, it's looking good. I mean, if this is how it transpires, because you've got Reliance up about 0.7%. Some of these big banking stocks that were stirring into life in the second half of yesterday's session, they're looking strong in the pre-open once again. So your ICICI Bank, SBI, big boys seem to be suggesting that they want to start off quite optimistic. So, well, 0.5% up as of now, at least.
Yeah, maybe I can slip in one more question on to Mitesh. Mitesh, we looked at GIC, RE and New India. Cash stocks, but when they move, they don't move 2-3%, they move 10-15%. And we saw large moves yesterday. Briefly.
Yeah, so in fact, GIC-RD was on my radar. I think the insurance companies are clearly looking good, and this stock seems to have given signals of completing the correction from 200 to about 140. Should get into an uptrend. I would look at a target of around 185 to begin with.
Okay, all right, Mitesh. Well, we're about to get the first rates. Actually, the Nifty opening is as good as what the SGX Nifty was suggesting, and we're likely to see a big gap of close to around 80 points. It's important because we'll be starting above that 50 DMA. Holding on to this is very, very important. Today we have expiry as well that's playing out. So around 18,100 is where we have opened up at. And, you know, the breadth of the market as well is pretty good, at least for starters. 1,400 stocks are advancing, for just around 300 stocks that are declining. The Nifty banks a little slow off the blocks, but that at least is opened up with a gain of close to around 100 points. There is expected to be some bit of resistance in this vicinity of around 18,050 to around 18,100. So let's see whether or not that does play out. Well, in terms of stocks that are moving around, Adani Ports, well, that's off the blocks in style. It's up close to around 2%. ONGC as well. Yesterday it ended lower. Today it's up close to around 1.8%. Adani Group stocks actually having a good morning. Adani Enterprises as well is up close to around 1%. And Tata Motors is up close to around 1%. On the flip side, though, you have SBI Life. Well, that's opened up with a cut of close to around 1%. And that's one of the big losers on the Nifty itself. IndiGlobe Aviation, keep an eye out on that one. I think that large trade has taken place on that one. It's down close to around 4%. There was big open interest built up yesterday. Massive shorting being seen out there. For the time being, it's opened up with a cut of close to around 4%. Straight $100 off on that one. Oil India took a bit of a break. That's bounced back up. And the Adani Group stocks, Adani Enterprises, Ambuja Cements, all of them have opened up in the green. So a good start, guys.
Not bad, I guess. So we've got, what, 80 points on the board right now, 0.5%. And it looks like it's stabilizing or, in fact, climbing higher as we speak. ONGC is reacting really well to this cut on the windfall tax. It's a big one that's come in for them. Tech Mahindra is continuing its up move from yesterday. Remember that huge move? We had about a 6% up move around the time we closed. Again, you've got a 1.5% on top of that. Most parts of the market actually doing quite well. The banks, as we mentioned, Axis, ICICI, they're participating. The bank Nifty is now almost in step with the Nifty. This is turning out to be a positive opening, and there seems to be some conviction around it as well. In fact, if you look at the downside of the screen, there's not much. There's the odd SBI Life, and then just 2 or 3 stocks in negative territory, and that too they're not down by even more than 0.3%. So the market has opened in fine form, and we're climbing as we go. 94 now on the board, and it's going stronger. The mid-cap index is not bad either. The mid-cap index is also looking at a gain of about 0.3%. Let's look out for PI Industries. Of course, Sonal was telling us about the takeaways from the conference call. Yep, there's more follow-through on PI. 2.5%, almost 3% up on that stock as well. SpiceJet, remember, it's not just crude oil, it's also ATF, on which there's been a reduction in terms of the windfall taxes. 1.5% up on SpiceJet as we speak. In the broader market space, let's see if there's anything interesting that we can spot right now. Oil India. So basically, this is this whole windfall tax cut trade that seems to be playing out. And a lot of the Adani Group stocks, actually all the Adani Group stocks are positive now. Adani Transmission and Adani Total Gas, on which the immediate MSCI index changes have been pushed back. They're, of course, positive, as is the rest of the group. So looking good, 0.5% up. Prashant, this looks like a very steady start. Now, the question is, can we sustain it and can we build on it, I guess?
So, the day's high has been, the opening high has been 18. Actually, we're at the day's high back again, but 18,116 is the high of the day, 18,117 or so. And we had highlighted 18,120 as the level to watch. There are two things there. There's the 50% retracement of the full fall from the all-time high to the budget low. And I think there is a moving average which coincides there as well. So 18,120, you want to trade above it and close above it. So we will see. We are about 20 points away from that particular level. Let's just, but yeah, it's a solid start, no doubt about it. The thing is to sustain this as we move on into the next few hours. Adani the group performance is actually, some up, some down. So it's kind of mixed. Power is up, green is up, enterprises is up, transmission is up, ports is up, Ambuja Cements is higher as well. And all of these have got significant volumes. gains are between 1 and 4%. Adani Green being the top gainer with a 4% pop. Others are, in that range. PI Industries, I think we did mention 3.25% higher. ONGC is up about 2%. It's coming up with decent volumes for this time in the day. Adani Wilmar is up about 3% as well. So it's more up than down for the Adani Group stocks, like yesterday actually. Oil India is up about 2.6%. Chennai Petro, so there is this windfall thing which we've been highlighting, the reduction which is playing out. Chennai Petro is up about 3.5%. Prestige Estates comes up with a 5% pop. But again, volumes do come up. It doesn't trade this much, but would like for volumes to show up in a bigger way to take cognizance of the price activity we're seeing. Indigo, of course, those blocks have gone through. Stocks down about 5%. 1894 is where we are at. And I think typically what happens is once you get an indication of the kind of people who've sort of bought in, and if the book is made up of high quality investors and so on and so forth, we'll try and get you a sense. I mean, the stock does recover. We'll see. Phenolics Cables, I think, did very well yesterday. It's pulling back a little bit, coming up with volumes, and that's the only reason I'm mentioning this. Shriram Finance is down, down 1.25%, nothing large. I was mentioning GIC RE, which had a big pop yesterday. Mitesh likes the name, but it's starting down about 1% or so. So that's it. I mean, that's a broader kind of sense. Max Health is down about 1.33% as well to begin the day with. So that's the sort of overall picture. Tech Mahindra, by the way, is now moved up to the high point of the day. It is also the top gainer on the Nifty. Tech Mahindra was the top number one gainer yesterday with a 5% gain, and it is up another 2.75%. The buzz in terms of the new CEO, etc., when that will happen. Our colleague Shireen spoke with the Tech Mahindra management in Davos, and they alluded to that it will happen at some point, and of course there will be a hand-holding period, etc. But maybe the market's speculating around that. And Apollo Hospitals is the other one, which is now moved up to the number 2 position. So it's almost deja vu from yesterday, a repeat of yesterday. Yesterday, Techem number 1, Apollo number 2, and it's a repeat this morning as well. Apollo Hospitals is up about 2.25%. Markets like what they heard right here on CNBC-TV18. Sailesh Rajbhan is Chief Investment Officer, Equity Investments at Nippon India Mutual Fund, and he's a market master of the day. Sailesh, great to have you with us here. Thank you very much for your time. Appreciate it. Your thoughts, Sailesh, on earnings and markets put together with what the earnings trajectory is indicative of. So let's just begin with what you and your team made of the earnings season which has gone by. And have your team brought down overall earnings expectations for your portfolio companies? Go on.
Yeah, interestingly, like you said, earnings have been trending weak now for 2 quarters. This is the second quarter where we have seen earnings trend lower, and generally a little bit of worrying part here is the earnings are trending lower across. So it's a broad-based kind of a weakness in earning growth is what we have seen this quarter. See, we have been, even in our last conversations, we have talked about lower earning growth for the immediate 2-3 quarters, primarily because of what's happening globally, which impacts demand. And even locally, post October, the demand conditions are not very great, both rural and the urban side. And I think this is more, it requires some kind of a time correction in terms of, a couple of good quarters of economic activity and improvement, infrastructure spending, which will bring this back to normalcy. But in the near term, earnings are certainly trending weaker, maybe between 9 to 10% kind of earning growth broadly is possible, unlike our structural earning opportunity of 14-15%, which our companies can deliver, given our size of the economy today. So on the earnings side, there is at the moment very modest news. And I think it will still take a couple of quarters because the global situation has to improve. Domestic, as we enter into post the monsoon season, you may have meaningful recovery and domestic demand as well.
Shailesh, morning. Great to be chatting with you again. This is Surabhi here. So I have a question, a simple one. I mean, let's say for every incremental 100 rupees that you're getting, we have a very interestingly poised market as well. So will you be putting that incremental cash in consumption-oriented themes? Or would you be looking at manufacturing, capital goods, the old economy, capex intensive side of the market to park that cash?
Yeah, see, the way the markets have turned, Surbhi, in the last, or the way the valuations have turned in the last 12, 18 months, you have seen a significant rally in manufacturing businesses and manufacturing and engineering businesses. So while their outlook for earning growth remains reasonably strong from a 3-5 year angle, today the valuations do factor in that, they cannot have any room for any disappointment in terms of growth there. While consumer businesses, which have been struggling and have been flattish or lower for the last 3 or 4 years, right? There the valuations are now trending to be reasonably okay. They are not cheap, but reasonably okay versus where the other components of the market is. And I think slowly the consumer space will also start giving you reasonable opportunities to participate because raw material prices are coming off. Demand, though is weak, should get better in a few quarters from here. And there the ownership has also been fairly low because we have seen significant 3-4 years of underperformance there. So I think you will have maybe consumption a little more preferred than investment in manufacturing today.
All right. Hi, Sailesh. Good morning. What about the IT space? Everyone was fearing a slowdown globally. Some of those numbers didn't look too bad. And actually, it's been a relative outperformer in the last 45 days or so. What's your sense on that space, on large cap IT or mid cap IT?
See, the IT space has, the fear of a very sharp decline in terms of demand. I think to that degree has not yet come about. But you must understand that these are a little early cycles in terms of, how the demand conditions will be behaving, especially when US has continued to remain fairly strong. As weakness in US because of higher interest rates feeds in, we just need to understand how companies and corporates behave at that point of time. So maybe you'll have clarity maybe in the next 3-4 months in terms of how demand conditions in the US are behaving. And hence, whether the earning growth outlook for these businesses is late single digit or, double digit will be visible maybe very clearly in the next 3-4-5 months because that will really decide on how the opportunity to execute comes about. The only point to note is that IT services companies have significantly corrected in the last 1.5 years in terms of where valuations stand. And they are also in some context relatively reasonably valued within the universe which was there. So it's unlike in the past where they were highly valued on high growth expectations. Now growth expectations have moderated, but valuations are also very normal now. So I think there is an opportunity emerging there clearly. We may have to meddle with lower growth for maybe a few quarters there, but I think given their cash generating ability and all that, the sector is getting attractive.
Okay. Sailesh, just one space, I don't know if you have a view, but it's been beaten out of shape, is consumer durables. It's not that large a space in terms of market cap, right? But any interest from the Whirlpool to Voltas to so many names, right? Havells, V-Guard, etc. There's a fair bit of price damage, and it's a bit of a would be a contra theme if you were interested. But would you like to look at that space, or have you?
Yeah. So consumer durables are in some sense facing a perfect storm. After the rebound of COVID and all, and significant preponement in demand, you've got and now with higher inflation and prices hitting the income levels and hitting the kind of consumer sentiment, you have seen a slowdown there. Clearly, these are some of the most underpenetrated categories in India and have a very meaningful runway. And like you rightly said, these corrections have made valuations very normal now. They are no longer those 40 times, 45 times, 50 times earnings on very strong earning expectations. There would now be 25, 30 times on very modest earning expectations. So the risk reward is certainly becoming very interesting in this space. And I think we have seen reasonable consolidation, maybe a couple of more quarters of demand consolidation can happen in the sense demand remaining flattish and all. But I think this will get into a very good space with a 12-month kind of view. So we are positive in consumer durable space given the level of underpenetration, the correction in valuations, and obviously the cash generating ability of these businesses, which is phenomenal.
Okay. By the way, just want to point out on the market, Prashant, we are at that level of 18,120 that you were talking of. Steady, solid, there is no dithering at all. And it's a lot of, more of the same that's playing out. Tech Mahindra is one stock, and look at what's happening to Apollo Hospitals.
Yeah.
Again, it's in pole position, the Nifty winner, 3% up. I was going through a note that Jefferies came out with. Their price target on Apollo, they have a buy and their price target is 5,375. They're really expecting more upsides. And I think the market's taken note of that statement that Ms. Reddy made on the channel yesterday, that losses in the digital business in 24/7, they have peaked out and it'll get better from here on. So anyway, that's a strong, strong mover today. Shailesh, since we are on this subject, and of course in your earlier years, you've spent so much time picking, stocks in healthcare and pharma. Let me ask you this, who better than you to tell us? I mean, these stocks kind of went off the radar, and for good reason, because the best of the COVID peak was perhaps behind them. How are you looking at healthcare and pharma?
The sector is very, very interestingly poised, both from a valuation and a recovery in earnings point of view, especially domestic demand-driven, domestic branded pharmaceutical businesses and the healthcare side, the diagnostics as well as the hospital space. So from a demand condition point of view, I think these are in reasonable, as demand is getting normalized, it is becoming fairly reasonable and predictable now as we get along. And second, the valuations are like, it is among the cheapest sector effectively if you see broadly, other than metals and some other areas, from a business which is such long-term sustainability, which it has, the valuations are very, very reasonable from where they stand. And I think these businesses also have meaningful earning growth potential from here, because the base has been fairly battered because of higher raw metal costs. And then, you had demand, especially US demand conditions not being great, US pricing pressure was there. So I think earnings are fairly compressed. The opportunity to grow earnings early double digits is very real. The longevity of the businesses is very, very good. And hence the valuations which they are today, which are way below their normal, I think are present a very interesting opportunity.
Okay, all right, Shailesh, thanks so much for joining in this morning, giving us your take on a whole host of sectors that we just discussed. Wishing you a good day and look forward to chatting up with you rather soon.
Thank you so much. Yeah.
Well, for the time being, the Nifty is off the blocks in style. We were indicating an 80-90 point uptake. Well, it's up close to around 100 points and we're holding on to those gains. So that's quite encouraging. The Nifty Bank as well is making a bit of a move. Let's see whether or not the Nifty Bank can move towards the 50 DMA. That's around 300 points away from current levels. The Nifty has already conquered the 20, the 100 and the 50 DMA. So good time then to get chatting with another management. Well, it was a decent quarter coming in for Endurance Technologies, as the company reported revenue growth of close to 11% in comparison to last year. The company has also managed to expand margins a little bit. And, we want to understand how much of this is sustainable. Well, to understand that, we're joined by Mr. Ramesh Gihani, the ED and CEO at the company. Good morning, Mr. Gihani. Thanks so much for joining in. Well, good to see a bit of an improvement in terms of margins. But let's focus on the smaller part of the business. That's the European part of the business. So 25% of your revenues comes in from there. And after, I think, 5 to around 6 quarters, if I'm not mistaken, we have seen that margins have expanded from around that 8.5%. It's moved to around 12.5%. Now, part of that is because of lower energy cost as well as compensation coming in from governments as well as clients. Do you believe that this margin recovery in Europe is sustainable? And what's the guidance, particularly for the European business? Go ahead, sir.
Yeah, good morning. First of all, I'd like to tell you that the market dynamics will continue to play on the business. Even if the energy costs are coming down, the dynamics are a bit different. And how well do you perform in that is totally dependent on the kind of strategies you take around with your business under these dynamic conditions. For example, now, even if electricity costs is coming down, gas prices are coming down, and large part, let's say 50% of the energy cost and gas prices have been indexed by the OEMs. This is a positive sign. But the volumes are still a bit subdued, as the new car registrations is down by approximately 1.9% compared to the previous years. But the positive side is that the new car registrations, although being down, but the stocks at the dealers level has reduced from 3.2 million vehicles to just about 1.2 million vehicles. So which is a sign that probably the numbers can get better. And as such, we've already seen, a lot of downside, approximately 20% or 23% with respect to FY19. I don't think it's going to go any further down. Here onwards, you can only see things better happening.
Mr. Gihani, good morning. Can you give us some more color on the domestic business, the India business? And I'm talking specifically two-wheelers, because that's the lion's share of your business, right? I think almost 60% of revenue. And we know that, two-wheeler sales have been pretty sluggish last few months. What are you hearing from OEMs now? What is your own outlook on your two-wheeler business?
See, there are 2-3 points attached to this. One is that Q3 is generally a weak quarter because it relates to the year end. Secondly, the export market is quite down. It's been heavily hit by approximately 25% across the industry. And if you look into the total numbers, around 12 million vehicles have been made so far, out of which 2.9 million vehicles are for exports. Now that itself is down by some around 25%. So the export market is bringing the volumes down, which is impacting the total overall outlook of the business. But as things move forward, people are very optimistic. They're hoping that as the geopolitical environment improves, the numbers would come back in exports. And it is said that Q1 of next year is likely to be much better if compared to the current and last quarter.
Yeah, no, absolutely. And, the overseas outlook is much better, at least. I mean, the macro, how it feeds into the consumer level is a different question. But, I mean, the US, it's looking good, as data tells us. Europe, they themselves are now saying there is no recession or anything of that sort. So in that light, I mean, if this does feed through, what's your sense? What can it do for your sales? If you can give us some outlook for FY24, and in terms of margins as well, what will this mean? What kind of trend margin should we expect going forward?
Okay, let me put it in a different way. As far as margins are concerned, metal prices and metal prices and commodity prices had some impact on that. Energy prices had an impact on the margins, which is now improving. If I look into my current European margins, they're approximately 14.4%. Now, and this corresponds to somewhere around 16.2% when I remove the metal price indexing from it, which is fairly, it's fairly upwards as compared to the previous years. Now, previous quarters, I'm sorry. So, as we move forward, we can only look at an optimistic side of it, as things will improve, because everybody's looking at the numbers which are moving upwards in sense of EV vehicles are going up and hybrid vehicles are going up, and that's where everybody's looking at of getting higher numbers and improving the business outlook.
Okay. All right, Mr. Gyani, you're sounding a little bit optimistic, so that's good to hear. Let's understand more then, since you just touched upon EV. Could you tell us what is the quantum of order wins from the EV space? What's your EV order book? And also, as a percentage of revenues, how much can EV contribute, say, by 2025?
Okay, I would not like to give any forward-looking numbers. That's something we generally don't do. But I can tell you one thing. We've won close to 600 crores of business in India, and 140 million euro business acquired overseas, out of which 70% is for EV and hybrid vehicles. So I think our acquisitions towards EV vehicles is pretty sharp and good. And I see that everything from here onwards is going to be increasing, because for the simple reason that the kind of product configurations that we have, they're very much EV agnostic, and acquiring more businesses from these players is not that difficult right now, because we were a bit late starter, but we are getting high onto pace with all these key players.
Just to understand, Mr. Gehani, how do margins compare in the EV business versus the non-EV or the regular ICE engine business?
I would not like to comment on that, because the configuration of the vehicles are different. If I say EVs are better or ICEs are better, it would be an improper comparison, because the configurations of the vehicles are different and the configuration of the product is different.
Which is why I was just trying to understand, purely in terms of margin profile, I mean, whether EV is a higher margin business for you, exactly for the reasons that you mentioned, that they're very different products.
Well, they're comparable, right? If they're a notch better than IC engines, it's because, the kind of value add that comes in-house, where you've got to do a lot of value-added portion in-house. That's why probably the margins can look better in EV segments, but they're comparable otherwise.
All right. Sorry, just to clarify those numbers once. So you said on the EV side, you've taken in orders worth 140 million euros, and 70% is EVs. Is that what you said?
Yes, that's in
So
Europe.
$100 million is euros. This is unexecuted EV work that you have outside India.
Exactly.
And in India, 600 crores is the total orders that EV orders that you have that you're working on, right?
Yes, already acquired. Business already acquired.
Got that.
Okay. All right. Mr. Gyani, I want to understand another aspect. If you could tell us the ABS market size by volumes and how much has Endurance Tech in terms of capacity on the ABS side of things, and you're looking to add some capacity, I think, out there. So what will the number go to?
Yes. See, as per our calculation, approximately 3.6 million vehicles would be ABS configured. We have got a capacity of 400,000 in a year, which we are increasing, and that's for the single channel ABS. We are increasing that rather say we are adding a twin channel configuration also, for which a capacity of approximately 200,000 per year is getting added. Current run rate is close to 400,000, which was the original capacity setup.
So your capacity will be going to 600,000?
Yes.
Okay, so effectively you would be close to nearly around close to around 18 to 20% of the market.
Yeah, initially yes, and we've got better plans. See, let's try to understand today. We have already supplied more than 250,000 ABS modulators in the market, and they're all defect-free, zero defect. So that gives us a very positive edge over, and it wins confidence of our customers. And we being probably the only Indian supplier over here to supply ABS as compared to the multinationals like Bosch and Contis.
Okay, got that, Mr. Gehani. We will leave it on that note for today. Thanks very much for joining in and giving us some more details on the business at the end of the third quarter. Markets holding up in fine form, 105 up on the Nifty, and a lot of mid-cap stocks are also beginning to make a move. In the large caps, obviously, ONGC and Tech Mahindra. ONGC on the windfall tax, that's the big one worth noting. That's the big mover on the Nifty. Well, on that note, we do have to take a very quick break. On the other side, more earnings conversations lined up for you. We'll be chatting with Rupant Singh of GMDC, talk about their third quarter numbers, and then we get chatting with